All right, you're taking a look at live pictures from the floor of the New York Stock Exchange and the NASDAQ market site. On Wall Street, Klarna ringing the opening bell as the BNPL leader set to make its long-awaited debut on the NYSE later today. And in Times Square, Answer the Call, ringing the bell, an organization dedicated to benefiting families of New York City police officers and firefighters killed in the line of duty. Welcome to Yahoo Finance's opening bid. I am Myles Udland, in for Brian Sazi, who remains on assignment. Stocks closing yesterday's session at record highs. More excitement in the tech sector today. Oracle, of course, we'll talk about that a little bit more later on in the program. Got the IPO market heating up, gold at record highs. Let's get a quick check on the major averages and where things stand in markets to kick off this trading day. We'll send it to Brooke DePalma, who is live from the NASDAQ in Times Square. Brooke.
Good morning, Myles. A bit of a mixed picture here at this morning's open. Right now, we have the Dow moving lower, down about 0.2%, but the NASDAQ and the S&P 500 holding on to that momentum after all three major indices hit record closes on Tuesday afternoon. The NASDAQ moving higher this morning, up about 0.5% at the open, and the S&P 500 also moving higher based upon some bullish views that we're getting from the street. Right now, we heard new S&P 500 targets from Deutsche Bank for year-end. They said that the S&P 500 could rally to 7,000. Barclays upped its S&P 500 year-end target for the second time in the last few months. They say that the year-end could be 6,450. Now, Barclays largely said that this could be based upon really stronger than expected corporate earnings. In addition to that, resilient U.S. economy and optimism around the artificial intelligence trade. And I do want to get to Oracle because right now that is the top trending ticker on Yahoo Finance. And what we're really seeing is this upward momentum. Intraday here at the open, the stock is now up more than 30%, trading above 32% right now. And that's largely because of that AI revenue outlook that has Wall Street really excited right now. Now, on the flip side here, we are seeing more and more investors also positioning themselves, perhaps hedging against this large AI rally that we've seen over the past few months. And so I do want to point out to gold futures. We are seeing gold futures moving higher based upon the expectation that the Federal Reserve will cut rates later on this week. Keith Lerner just told Yahoo Finance that while they're positive on the overall market, there's actually still some headwinds, some potential headwinds there. And so while stocks and bonds are down on some days, they're seeing that gold is actually providing a good diversification. And that's really what we're seeing move gold higher. Year to date, gold futures are up about 40%. But once again, taking a step back, all three major indices, a bit of a mixed picture here, but the NASDAQ and the S&P 500 holding on to momentum this morning.
All right, Brooke DePalma, thanks so much. Let's kick things off with a look at some of the biggest stories for investors on this Wednesday morning. Number one, Oracle shares exploding higher after the company said late Tuesday its AI-related cloud revenues are set to approach $150 billion by the end of the decade. In its current fiscal year, that business is set to bring in closer to $20 billion. Stocks rally on Wednesday put it on track to add more than $200 billion in market value in just a few hours. Number two, investors hardening their rate cut bets for next week after the latest data on wholesale inflation showed prices unexpectedly falling in August. The producer price index for last month showed headline prices fell 0.1%. Bets on a 50 basis point rate cut now up to around 10% early on Wednesday. Tomorrow's consumer price index will be the latest piece and the last piece of the inflation and overall data puzzle before the Fed's policy meeting kicks off on Tuesday, September 16th. And while most investor attention remains on the mega cap stocks leading the AI trade, we've heard more and more folks on the street talking up the prospects for small caps to at least have a moment to perhaps stop disappointing investors. We'll discuss, and here to break it all down is Keith Lerner, Chief Investment Officer and Chief Market Strategist at Truist, also joined by Melissa Otto, Head of TMT Research at Visible Alpha. So we started that read talking, of course, again, about what's going on with Oracle. Melissa, I want to start with you just on the overall tech trade, what you're seeing, and maybe just any takeaways you have from that report. A company of that size coming out and essentially rewriting an entire one of its business lines. And this kind of market cap move puts it into an entirely different stratosphere in terms of what its peer group is basically overnight.
Thanks, Myles. It's great to be here on this rainy morning here in New York City. Oracle just blew away expectations, much better numbers than Visible Alpha consensus on its outlook, particularly for the cloud infrastructure business. Cloud infrastructure business going out a couple of years was looking for closer to $90 billion. The company outpaced that by over 50%. So I think, when we look at that sort of outlook and the visibility that the company management gave, it provided a very clear line of sight in terms of the valuation and the sort of growth we can start to expect. And that growth is clearly what is getting priced into the valuation this morning.
Melissa, I'm curious if there's just a thought that you have looking at, again, a company the size of Oracle with the established customer base that it has, coming out with that sort of outlook for one of its key business lines. If there are other, companies you're thinking about, like maybe this company is yet to say X about its business, or if there's maybe a broader sentiment indicator, from your position, looking at tech specifically around like this opportunity for companies to still say, hey, we haven't hockey sticked yet on our AI business, like how you were processing a move like this. Because again, a 30% rally in a company that was, worth hundreds of billions a day ago, just a day ago, is not the thing you normally see in financial markets.
Indeed. And, there are two components to this. One is they are the leading multi-cloud provider. So they have a platform that enables organizations to leverage different cloud providers. And that's an unusual service. No one else is really doing that the way that they are. And the second thing is they have been very well positioned on the sovereign side for a while now. And they're not just bringing AI to companies, they're bringing AI to countries. And I think that capability as well, and the way that their cloud services and this multi-cloud offering is really approaching that is also a competitive advantage. Now, in terms of, like other spin-offs, let's see how this could go. One interesting aspect of this coming later in the year could potentially be Dell. Dell disappointed this quarter, and their guidance for Q3 was kind of a bit below expectations, but going into Q4, things could start to heat up for them, and that could be an interesting one with their AI servers.
And a new CFO to boot, so we'll see how that story evolves in the coming quarters. Switching gears a little bit, I want to talk about the state of that Fed bet that we see for next week. We saw the PPI data this morning, CPI we're going to get tomorrow. Keith, I'm curious for your thoughts on the overall setup, how you've kind of talked through the Fed dynamic with clients, both on what they're going to do policy-wise. A lot of the political noise around the central bank has become an interesting story. Obviously for investors, they usually just care about is the rate going up or down, but right now it's a richer area than I think it's been over the last several years.
Yeah, well, first, Myles, great to be with you, and also great to be with you, Melissa, as well. So you're right; it's a main narrative right now. But I will just say, the narratives keep shifting for this market, and right now the Fed is the focus. But going back to the Oracle's numbers, whether the Fed cuts 25 basis points or whether they do 2 or 3 is not going to be the main driver for that stock. It's about this dominant theme of AI for the large cap stocks. It does matter more for small caps. But going more directly, at this point, there's a lot of political noise. Our base case is that we have, at least 2 rate cuts this year, potentially 3 based on the inflation side. I think, again, for the overall market, which is still up double digits this year on the large cap side, it's not as relevant for that side, but it is relevant more for the rotation trade. And going back to the political side, we're going to continue to follow the data. And at this point, we still think the Fed is likely to go ahead and cut rates, regardless of who's moving in or out over the next couple of months.
And Keith, as you were talking, we had yields up on the screen there, and I'm curious how you're just thinking from a portfolio standpoint, where fixed income fits today. We're going to be exiting. It seems we're going to be exiting a period where you had, you could kind of grab yield anywhere. It was a different, a real diversifier within the portfolio for the first time in a while. Just how you've looked at maybe a new rate regime. As we move away from that, we've got the AI trade, and it just becomes an interesting time, to think about where folks are allocated, outside of just, the mega caps and what we mostly talk about here on this program?
Sure, and we've been, as a ballast for portfolios, we've been focused on high quality fixed income. I think, maybe some of our viewers may be surprised that given all the concerns about inflation and deficit, and you said, where's the 10-year been this year? It's actually down 50 basis points. So that's actually effectively a Fed rate cut. And that means as those rates have been going lower, the bond prices have actually been moving up. So we still are more focused on the high quality side, just because investment grade spreads are the tightest we've seen since the 1990s. I will say we've seen a big move down in yields. They've, over the last few weeks here. So we think they're a bit rich. So if we had a bit of a move back up, I think we'd become more interested in adding or extending what we call duration or maturities. But at this point, we're just being patient, focused on the high quality and looking for a better opportunity in that credit space.
Melissa, I'm always curious when we talk to folks who are focused on a specific sector, how they view the overall, macro setup, this rates environment, and how you think about opportunities within tech companies that you're looking at, ideas you're thinking about with your team. Does this matter to you? Does this move the needle for you? What has the approach been this year? Because it's certainly been as dynamic an environment on the macro side as we've seen in some time.
Absolutely. I mean, this is a critical dimension to the way that we look at the space. I think one of the biggest aspects of mega cap tech is its size in the index. I mean, right now, the mega cap tech stocks make up just over a third of the index, which is astonishing. And what about the other 493 companies? And so in a shifting rate environment, it can actually potentially make some of those mid-cap, smaller cap stocks more compelling from a risk return aspect. And it can also shift out some of the more defensive aspects of the market. And I think one of the things that we often hear about the mega cap tech stocks is that even though they're growing and the fundamentals are very good, the valuations are pretty high and that they do behave a bit defensively. So if we do start to see rates come down and there to be an overall loosening of that, I think, there's a potential in the market for some of the smaller companies to potentially catch a trade.
All right, and Keith, I want to get you out of here on this, talking about small caps a little bit. We had a discussion this morning about kind of your view on small caps. It was like, well, he went to neutral on them, all right? We're not banging the table on small caps. I'm just curious how you think about that trade. The Russell, everyone was very excited about it a couple weeks ago. It's like, whoa, we're back at 2021 levels. How you view that trade at this point in time? A number of different dynamics, I think, weighing on that sector, on that index. So just what you're looking at for small caps balance of this year, and then maybe as we look at that turn in the economic and the rate cycle into 26.
Yeah, I'll jazz it up. I'll say we're strongly neutral. So we have been more negative on small caps. I do think on a shorter term basis, we are seeing some more positive trends, and there is likely some catch up. One, the setup is they've underperformed on a 3-year basis the most since 2000. That's a condition, not a catalyst. The catalyst that we're seeing is the earning trends are actually starting to move up. We're seeing that underneath the surface with financials, industrials, technology, communications as well. And then we also have really negative sentiment, meaning we've seen huge outflows out of small cap ETFs and so forth. So it doesn't take it takes a little bit of money coming from some of these other areas and these that could lift these stocks and move them quickly. I would say longer term, I think one of the challenges is I was just looking back. Here's a stat for you. NVIDIA moved out of the small cap index in 2001 when it was a market cap of around 8 billion. 8 billion with a B. Now it's 4 trillion. So what happens with these small cap indices, once they graduate, they move out. So that's one of the inherent structural longer term challenges. On a short term basis, we think they will at least participate. And I think someone said it earlier, maybe less disappointing relative to all these kind of head fakes we've seen the last few years.
Yeah, it's interesting. You see Klarna is going to come public today, $15 billion market cap. might almost be too big for the Russell at this point by the time it makes its debut. And there's hundreds of companies that are worth tens of billions of dollars in the private market. If they ever come public, maybe never get that moment in the small cap index. All right, we'll leave it there, Keith. Too long, my friend. Good to see you once again.
Yeah, good to see you.
Melissa, stick around. We'll talk all things Apple coming up in just a little bit. Yahoo Finance executive editor Brian Sozzi has been at Goldman Sachs' tech conference in San Francisco all week, grabbing time with some of the top execs in the industry. Here are a few of the key moments.
The depth of the demand, the scale of the demand, the breadth of the demand is overwhelming the industry's capacity to deliver the compute that is required by OpenAI, by the hyperscalers, by the enterprise, by the sovereigns. It's just layer after layer of overwhelming demand. And so we're building as fast as we can, we're building as large as we can, we're delivering as many GPUs as we can. On the one hand, I've got Sarah yelling at me, on the other hand, I've got Jensen yelling at me, and we're driving through the middle to try and get this infrastructure into the hands of these incredible companies that really have the capacity to allow artificial intelligence to achieve its potential.
Right now, the AI is in the first inning, or whatever you say in baseball, which is not my sport, by the way. But they are building the data centers right now. The next step, when they have all the equipment there and everything, they need connections. No one has more connections in the United States when it comes to backhaul as Verizon. And then after that, you're going to move some of these applications out to the edge. That's where we have all our metro network and edge computing. So for a company like us, this is creating a great opportunity. We call it AI Connect, because ultimately you need to connect the AI to the ultimate customer, either enterprise customer or consumer customers. And that's going to happen the next years to come. We have already positioned ourselves in that area.
Software and services as we know them are going to be profoundly affected by AI. There's just no question about it. So I think there is definitely a shift in the gravity towards data, because actual data about what happened in the world, whether it's a call transcript or how did your business do, that's the goal. And that's what's driving our momentum, because other things that you can do on top, there's just an explosion of innovation that is happening. I think what you're seeing investors do, though, is sort of take some of these insights and essentially roll them out to infinity, which, as you know, might not be how things work.
Stocks are now trading at record low valuations in some cases.
I think there's definitely a case to be made that some investors are taking these early nuggets and just rolling them out like way forward. Remember, this is a dynamic world. The software companies are not going to be sitting still. They are going to figure out how they can disrupt themselves, how they can create new services. But what I feel very confident about is this is very much a before and an after moment, just like the internet. But exactly how it's going to roll out, I think it's just really hard to call.
All right, coming up on opening bid, our stock of the day. Here's a hint. There's a good chance you have its product in your pocket right now, or you're watching this on their products. We'll talk about that coming up right after this. All right, let's turn now to our stock of the day, and that is Apple. The company on Tuesday hosted its latest worldwide developers conference, unveiling a host of new products, most notably the new iPhone Air. Still with me to discuss all things Apple is Melissa Otto, head of TMT research at Visible Alpha. So Melissa, let's just start with your high-level takeaways from what you saw from Apple yesterday. A pretty busy day, I think, on form factor, one of the more interesting events that we've seen in some time.
Hi, Myles. Actually, we were like, it felt very iterative.
I tried.
It lacked some of the wow and excitement that I think was starting to get baked into expectations. That's been reflected in the stock price. The question's going to be, how does the consumer respond this holiday season? Do consumers really want a thin phone? Is battery life and performance really going to drive the total addressable market to upgrade? That's the question.
So what we did not hear yesterday really was anything about AI. That's kind of been the big theme with Apple, right? Where are these guys at when it comes to the AI trade?
They're not.
Yeah, what's your view on that? And like what's it going to take? What's it going to take for Apple to say, okay, this is our AI strategy? Because I think yourself and many of your peers are just keep poking around, being like, guys, I don't see it.
I mean, they're sitting on 130 billion plus of cash. Let's do something interesting with that. Let's, wake up the market and, do something exciting. I think, they're just, talking about like, okay, you're going to get like a couple extra hours of battery life and, this is the glass is harder, it's not going to scratch as much, is like a snooze fest in the face of all of this exciting AI stuff that's going on in the background. It's like, okay, great, so when I drop my phone, it's not going to crack as easily, but like, how are you going to revolutionize my day-to-day life like you did with the iPhone 10 plus years ago?
And I'm curious your view on the stock, because it's interesting. I feel like a lot of times we discuss the stock as if it's not down 8% this year, but it is down 8%. Like this is the second worst performer among the Mag 7 names. Just what your view is on the story at this point, and we talked about it on Monday on this show. Like one of the first things they call out, one of the only things they call out in the press release is the buyback and the dividend. Like that's the state of the Apple story right now, so far as I can see, at least around the stock price itself.
Yeah, it's been a meaningful underperformer, and I mean, expectations still remain high, as does the valuation. Looking ahead to next year, the market is expecting iPhone 17 to sell 160 million units. That's a very punchy number. Even for this final quarter of the year, they're expected to sell 27 million. So with those sorts of expectations for an upgrade cycle starting to be already baked into the valuation, it does pose questions about whether or not they can deliver.
Yeah, every time we talk about or you think about the upgrade cycle, part of me has this like, it's not 2016 anymore. Like everybody's got an iPhone kind of, and I might get a new one, but I might not, but it doesn't move. There's no lines around the block. We all remember that cycle, and it just feels like the world has certainly moved on. All right, Melissa Otto, thanks so much for stopping by today.
Thank you.
All right, coming up on Yahoo Finance's Market Catalyst, we bring you the news behind the market moves for the trading day. You won't want to miss it. Julie Hyman standing by.